So let's talk about the macro. And the one macro thing I want to talk about is why the US can grow even with $100 oil. Now, I know we're in the midst of a fog of war, and the S&P is down 8% in February. And part of that has to do with the fact that oil is up 58%. Now, if you're pessimistic, you're not contrarian because as you can see here, hedge funds have been shorting the stock market at the same pace they did in in February 2020 and in April 2025. In other words, hedge funds are quite pessimistic about the US economic prospects because of this war. So, let me give you some thoughts on why I believe the US economy is more resilient than that. Now, I'm not an economist, so consider this good enough for government work. Here are the 4 points in a nutshell why $100 oil doesn't break the US economy. And I'll go through each of these, but the point being, the US is a lot more resilient than many people realize. The first is that $100 oil today needs to be inflation adjusted. And when you do that, the oil price today is lower than it's been in the last 25 years. For instance, this is the nominal price of oil, what you pay at the pump or per barrel of oil. And at $106, it's near the peaks that we saw in 2008 and 2022, both times putting a lot of stress on the economy. But we have to remember inflation reduces the present value of a dollar. And so when we inflation adjust crude prices, that's the lower chart here. And as you can see, the current price of oil is lower than it's been for most of the last 25 years. Again, that's good enough for government work. And here's another way to think of it. Think of the energy intensity needed to produce a dollar of GDP. And as you can see, it's fallen sharply in the last 35 years. The second is that the war actually stimulates the economy. Firing bullets and ammunition is expenditures, and that boosts GDP growth. In fact, if you look at the last seven major U.S. conflicts, the U.S. has spent $1 trillion inflation adjusted in many of these wars. Of course, World War II, but Vietnam War, the Afghanistan War, the war in Iraq. And so that leads to question, well, we've spent about 32 billion so far, but this could be $1 trillion of spending. On an average, that works out to about $32 billion a month. So that's all adding to earnings growth right now. So the question is, how much would oil have to rise to offset that? Now, that's not a great comparison, by the way, because as I've explained before, the US is an exporter of oil. Therefore, rising oil is actually a boost to GDP. But let's ignore that for a moment. Here's a range of oil prices in gray. And then assuming 20 million barrels a day of consumption, how much does that increase the burden of oil to the economy? And as you can see, the higher the oil price, of course, the higher the monthly burden. But to match the wartime boost of 32 billion, WTI has to go to roughly 125. Now it could go there, but again, that would have to be a meaningful increase from the levels here. So again, good enough for government work. And then finally, keep in mind, stock markets are discounting mechanisms, and it turns out equity markets bottom very early in a war. In fact, over the 7 major conflicts I've highlighted, okay, the stock market bottoms within 10% of the duration of that war. I know that might surprise you, but take a look. This is the 7 major conflicts. But even World War I and World War II, the market bottomed within 5 to 8 months. And those were multiple 4-year conflicts. So bottom line, the US economy is resilient, but also it's a reminder not to try to time the market. And as far as how markets are being positioned, well, leading since the war started is energy. That's not a surprise, but notice crypto has outperformed gold meaningfully, especially Ethereum. And then tech and rate proxies have outperformed. So putting it all together, this is really basically what we've been recommending on the FundStrat side, energy, crypto, tech, and rate proxies. So let's look at granny stock performance. The top 5 performers are energy and basic material stocks. Bottom five are hyperscalers and momentum names. Same thing with Granny J. Top five performers are energy and basic materials, and the bottom five are basically AI and momentum related stocks. So, on a thematic basis, the PMI recovery continues to perform well, and then energy and cybersecurity and easing financial conditions. So, to me, this all points to the same notion that US relative growth is actually relatively resilient.
Well, listen, if we continue to get headlines like this over the next 2 days, I suppose Monday might be a down day, might be a difficult day, especially if it gets worse than the headlines that you've just relayed to everybody, right? If they don't find this pilot, if they shoot down another plane. And look, it's the holidays. You know this as well as I do. It's Passover around the world. It's Passover in Israel. It's Easter here in the Christian part of the world. And so it's a perfect weekend. If Iran really wants to turn the temperature up, this would be the perfect weekend to do it. And I think that's some of the anxiousness that went into last week and yesterday as we moved into the weekend. So yeah, it's a little bit skittish, and if it stays like this, then I suspect Monday is going to be kind of a difficult day.
Yeah, and by the way, there is another headline coming through via the Wall Street Journal. Mediators are saying that the latest effort to reach a ceasefire between Israel, the U.S., and Iran have hit a dead end. This current round, of course, was made by regional countries, these mediators led by Pakistan, to hopefully reach some type of ceasing of the fighting between the U.S. and Iran, and it apparently is not working. We understand, though, that the market really begins to become not inured to this kind of news, especially when a U.S. jet is shot down. But nonetheless, the market has, could you say, held up relatively well? It's of course, has to deal with the wave of bad headlines regarding oil prices.
Yeah, I think overall, considering the market has held up well, and look, you saw it the other day when they thought the headlines were positive and there was an end in sight and Iran wanted to make a deal. You saw what happened to the market. Investors went piling right back in. Traders that had gotten out of the market were rushing to get back in. And so you can feel that it wants to go higher, but it's still anxious. And look, the headlines like what you're reading today, and if they continue tomorrow and into Sunday, are certainly going to create more angst. If it doesn't, if it suddenly over the next 2 days settles down, then we'll see the market settle down. And like I said, I think once we get through this, the market is going to rally. But it's that anxiety right now that's this anxiety producing headlines right now that are going to hold the market in check.